If you're like me, you're probably freaking out about your homeowner's insurance, especially in California where people are getting dropped left and right. We have an expert here today with us, Melissa Smith, who's been in property and casualty for many, many years, and she's going to tell us what it takes to be insurable, what we need to do to review our policies, and make sure we don't get stuck in a bind going forward. Melissa, welcome. How are you?
I'm great. How are you, Erin?
Doing fantastic. So thank you for joining Insure Your Health. I really appreciate it. And why don't you tell everybody who you are and what you do?
All right. Well, like you said, I'm Melissa Smith. I'm actually a property and casualty insurance agent. I've been selling insurance since 1998. I know I'm not that old. But my key to success, I think, over time is I've really taken the time to educate my clients to make sure they have the right protection for their insurance needs.
I love your approach, Melissa. You've been my agent for years, not since 1998 because I'm much younger. No, I'm not, but for many years. And we so appreciate you because you're so thorough in looking at all the aspects and making sure that we're taken care of. And it's really been tough in California with all the fires and everything that we've experienced, just making sure that we're properly insured. And I guess what I wanted to know and understand is what do insurance agents and companies look at to see that people are eligible for coverage and what are they looking for?
So, you said, it has really changed over the years, especially since 2017 and 19 fires in Sonoma, Napa County, which impacted my area. So insurance carriers are looking at wildfire scores, which really were not before. It was more protection class. Like there was two ratings. It was either how far are you from a fire department and did you have a hydrant? And now Cal Fire does wildfire scores based on the parcel. So like sometimes I can write you, but maybe I can't write your neighbor. Um, so they're looking at wildfire scores, claims histories, the conditions of your dwelling, making sure there's no visible hazards like debris in the backyard, around the house. Uh, Roofs are a real big issue too. A lot of people are getting non-renewals because the life expectancy on the roof is past. And so these companies are selling, images to the insurance carriers so they can see overall because we cannot physically go out and inspect every home. But these are the things that to kind of look for to make it so you're more proactive about your policy getting canceled, or if you're trying to find a carrier, because they'll come out and do an inspection.
So just to make sure I'm clear, so a couple of key components that people could do to make themselves more insurable: clear the property of debris, eliminate hazards, fix your roof. I mean, would you say those are kind of the big three? Anything that I missed?
Yeah, roofs, I mean, a lot of time people, you don't really think about it before because you're in your house all the time. You're going in and out. You're not really looking at things. You might not think moss on your roof's a big deal or that some shingles are starting to curl, but those are like red flags for insurance carriers because, risk of a water loss. So they're trying to really, because we can't really control the fires, but to be more proactive. Over time, we weren't really going out and doing midterm inspections to check on houses. And after you saw all these fires, because, fire season was just a certain time of the year, and now it's like fire seasons all the time. Like there's fires all year long.
So it was really just a whole new landscape, right? And so I feel like in the past, 30 years ago, people would buy an insurance policy and set it and forget it. I've got insurance, something happens, my insurance company is going to be there. And I think we learned from the fires and so forth that not all policies were created equal, right? And some people really struggled
True.
when they need that policy. And so I guess my question for you, Melissa, as an expert, what should how often, and what should people be reviewing in their policy?
So, in the past, people didn't really call their carrier 'cause didn't want to pay more for their insurance when they remodeled their kitchen or they added square footage or maybe you put on solar. But these are all things that you need to let your insurance agent know that you've done to your home because it's going to increase the value to rebuild. So, if you make any changes to your house, that should be even a call in the middle of your policy term because if a month later something happens, you want to make sure you have enough coverage to rebuild at that point. So I always say it's good, at renewal. You'll get your renewal about 45 to 60 days in advance. Take a look at it. Look at the, what your dwelling coverage is, which is coverage A, if you're not familiar with that on your policy. And you want to make sure that, it's not too low. Some people haven't looked at their policies in years because maybe their mortgage pays it and they just don't even look at it because they don't have to pay that bill. But I think what people are seeing now is that they really need to take, a look at what's going on with their policy. So that's very important that all people should have on their policy is you want to make sure you have an extended replacement cost endorsement. And so what that means is to kind of give you an idea is say that your dwelling coverage was 700,000. I always recommend like 150% if your carrier offers that, just because if you had a total loss and it was more than 700,000, that extended replacement, if you have 150%, would cover you to $1,050,000 to rebuild that house exactly how it's standing right now. Now,
So
what we
elaborate,
saw,
more, elaborate on that a little bit more, Melissa. I just want to make sure my listeners are really clear on the concept. So you're basically saying don't just get the replacement value today, do 150% because that will account for increases in the value of your property. Is that basically how that works, or is it a little bit different than that?
It's a little bit different. So you want to make sure that your policy has an endorsement called extended replacement cost. And what that means is that replacement is really just covering you up to your coverage A amount of, say you were 700,000, just to make easy math. So replacement, you have up to 700,000. Now, if you have an extended replacement, whether it's 120%, 125, 150, that will give you, so 150% is going to give you another 50% of that 700,000 on top of your coverage. So that's where I came up with the $1,050,000 for you.
And
So it kind of makes up for in case.
Why do we need that, right? Because is the 700,000 not enough to get it to its current state? Is that what the
Well, because here's the thing is that construction costs change all the time, and so does materials. And like we saw, for example, in 2017 when Coffee Park, those houses, reconstruction costs went over $100 per square foot for rebuilding for those houses. And that's because of what, the supply and demand was. So you don't really have control at that point. So it's always good because, we're not contractors, you're not a contractor. We're just using all the tools we have, and we're also going by what reconstruction costs was at the time you and I talked for your policy.
right?
So that's why maybe we talked at renewal.
So that's a big protection. That's so smart. I love that. So very, very good information, Melissa. Thank you so much for that.
And
And we talked.
yeah, one more thing to review.
Go for it. Yeah.
Oh, so one other thing I want people to look at too is building code coverage upgrades. So especially if your house is getting older, there's been a lot of code changes over the last several years. So you want to make sure your policy has building code upgrade changes. So for example, a lot of policies have 10%. So if that house was insured at 700,000, that means you have $70,000 set aside for building code coverage. So for example, say that your house was built in 1970 and you didn't have a sprinkler in the house. You know how now sprinklers are required. That would be a code upgrade because you didn't have it. Replacement is rebuilding your house currently how it is. So any kind of upgrade due to permits and codes, that comes out of a separate amount of money. So you want to make sure your policy has that.
And an adequate amount of it. So is 10% typical, Melissa, or is there a range on that?
Every carrier is different. There's 10%. I usually at least do the 25% option if your carrier offers it. So all carriers are different and have different coverage amounts. That's why it's important to kind of find out from your insurance agent or carrier what they offer.
Fantastic. Great feedback. Is there anything else we should pay attention to at renewal time? I mean, I hear a lot of people with raising rates and increasing deductibles and so forth. Anything from a cost standpoint that people should review?
Yeah, so at renewals, when you get your renewals, I always recommend you look at your declaration and see if there's been any policy changes to that policy. So usually there's a separate page saying these are the changes that have happened over the past year. Kind of look those over. Deductibles. So some carriers have actually switched their deductible to a percent of what they're insured for, and people don't know that because they don't look at the policy. They just say, hey, so like, I had a client come in and we were talking about their deductible and they're like, "Oh, I don't know what my deductible was." And then he didn't realize it was an actual percent. So his deductible was $20,000.
What?
So he had no idea that that was what it changed to. So that's why it's important to look at your declaration renewal, deductible changes. Also, another one that I've seen is that some carriers are doing wildfire limitations. So think about that. So wildfire, they in 2017 and 2019 in those fires, that was considered a wildfire. So that means that whoever has those policies are actually limited only to a certain amount for the fully covered.
So essentially, they're adding,
And asking
Melissa, just to clarify, so essentially a restriction is being added and people aren't necessarily aware of it because they're not paying close attention to the detail of what they're getting at renewal time.
yeah, not every carrier is doing that. Just a couple have done that I've seen. But that's why I'm like, always take a look at your policy when that renewal packet comes in the mail.
100%. Such good advice, Melissa.
There'll also be new
There'll also be new.
there'll also be new discounts being offered too. Yeah, so discounts will be offered for people under their policy. A lot of carriers are doing water leak detectors as a discount for people. Fire and burglar alarms, have been the standard. But you always want to see if you're getting all the discounts available for you.
Right. Super smart advice, right? Because things change and there's incentives out there and it's better for you and your home and it also could reduce the cost of insurance. So really a win-win. Anything else you would add, Melissa? Anything we didn't cover that we should be thinking about?
I'm trying to think here. We talked about insurability, reviewing your coverage. A lot of people do tend to have the California Fair Plan, and I'm just going to say really quickly, if you do have a Fair Plan policy, it's really, really important that you're insured to value because if you have a loss and you're not insured at like at least 80% of that loss, then they will not honor replacement costs for you. They'll actually convert to actual cash value.
Wow. Can you elaborate? What is a California, even for my listeners, this is industry jargon, but what's the California Fair Plan? Can you help us?
So the California Fair, yeah, the California Fair Plan is kind of like you're not able to find insurance because maybe you have a high wildfire score, and so none of the carriers are taking on, that remote area that you might be located in. So the California Fair Plan is a state policy that all the carriers pay into, but it's a policy that you have the California Fair Plan, which covers you for fire and explosion. There are add-ons that you want to make sure you have, like vandalism, malicious mischief, wind. And then people who have the fair plan have a separate policy, which is called the difference in conditions, and that covers you for theft, liability, and water damage. So those two policies equal like a regular homeowner's insurance policy. But again, like we've talked about, it's really, really important when you have the fair plan that you make sure that you have enough coverage because if you don't, they're actually going to limit your coverage.
So important, Melissa, because I also think often when something is sort of sponsored by the state and people see it, there's an assumption that it's going to be good and fair and actually take care of them in the end. And again, just like any policy, people have got to really review it and do their due diligence and make sure that it's enough, right? So this is fantastic advice. If there's one thing you could leave us with, Melissa, a take-home message, what would that be?
Take home, just, pay attention to what your coverage is, because I have a lot of people who come in and they're not sure what their coverage is. They're not sure what their deductibles are. They don't know how the insurance policy works. Before it was like we thought, oh, we're never going to have to use this. So people were kind of like, it's just, I have to have it, but so I'm going to have it, but I don't really pay attention to it. But now, over the last, 10 years, we've seen people like, okay, what is my policy? What am I limited on? Can we do a review? I always think it's good to do a review. It's not going to hurt you. I know some people will say, like, hey, I don't want to do a review because it's going to increase my costs. Well, there's things you can do to offset costs too. You could go with a higher deductible so that you have more coverage, and sometimes that will, compensate for that increase of premium, and you'll pay the same because a lot of people, nowadays are like, I'm not turning in for small claims because years and years ago, some people used home insurance as a maintenance policy. And, you would see them, they would want that low deductible, like $500, and they would just turn in stuff. But now people are seeing, claims actually impact your rates. And so, having a little higher deductible, because it's like this is more of a catastrophic thing, not, just to repair.
Right. I think that's such good advice, Melissa. As we've seen the industry change, we've got to be able to ebb and flow with that. You're amazing. Thank you for sharing all this great information. Come back to Insure Your Health real soon, and you can give us more feedback on auto and umbrellas and all the other things that are available out there. But for today, homeowners is where it's at. We are going into the summer season, and we want to make sure everybody is well protected as they get their renewals. Thank you so much for joining the show, Melissa.
No problem.
Talk to you real soon.